Has Trump's plan dramatically just backfired in open daylight? To give you a quick recap, we had the tariff dump, right? The worst day we've seen in ages. Yesterday, Trump U-turned on his tariff decision. Markets rocket to the upside in a record positive day. And now today, stocks and crypto plunging. Bitcoin back down below 80K. Where do we head from here? And what does this mean? Loads going on in the market, guys. Thank you for joining me for a live stream. Get up in the chat, ask me your questions. Let's hang out, let's chill, and go through what's going on in the market. I posted this morning that we're at a really important level here on Bitcoin. We formed this W reversal pattern. We need to retest and bounce. If we don't, we're going to break down. And if you come onto the charts, the breakdown scenarios happen. You can see exactly this big candlestick where we lost support and we've plunged back down. Now we're going to have to form a triangle in order to consolidate. Our next great hope is to somehow turn around before these lows, right? Of course, the bears will want to push us to the downside. But what is going on? What is going on? Why are we not pumping? We had a good CPI read this morning, right? CPI inflation's coming down. Surely, we should be seeing some positivity. Surely, we should be able to gain some momentum. Well, it's a little bit more complicated than that, right? Right now, you've got a situation where the market is very worried about the China tariffs. They understand now that we got 10% on all the other countries. Okay, they can factor that in. But the reality is, when you look at the US markets, you got the Dow Jones, the safe one, down 3% today. You've got S&P down another 4%. This is a plunge. NASDAQ down 5%. This is not good. Volatility spiking up again, 33%. Trump's plan has backfired here. So you have to remember, Trump's plan from day dot was to announce this scary tariff, get all these countries to panic so they come to the negotiating table, and then he was going to keep an eye on the market such that when the market got weak, he was going to announce this 90-day pause, which he did yesterday. He saw the bond market got out of control. He saw the equities were tanking. He saw everything was falling to the downside. People getting worried. His billionaire donor friends were ringing him and saying, hey, what's going on here, Trump? It's not what I signed up for. And he thought, I'm going to play my Trump card. See what I did there? Trump. Okay, you get it. And go for the 90-day pause. And everything will be okay. And to all intents and purposes, it was going okay, right? Yesterday was a really strong day in markets. 12% on the NASDAQ. A record day. Crazy day. But now we're plunging. We cannot build on that momentum, and we've given up half of yesterday's momentum, going back down now to levels we saw 2 days after this Liberation Day. 1 day after this Liberation Day, which was, we thought we'd start recovering. But it's not happening now. Markets are upset. They're having to understand that, hang on, there's 140% tariff here on China. This is a problem. Now, Trump, who's currently at a cabinet meeting in the White House in Washington, has said, I've not seen the market sell off today. I've been here for 2.5 hours. I've not seen anything. That's what he's claiming. Now, Janet Yellen, who's the former Treasury Secretary at this point, has said the following. She said, I'm afraid I could not give it a passing grade. Okay, she said it's a relief that Trump paused his so-called reciprocal tariffs. But the damning statement is, she said, this is the worst self-inflicted wound that I have ever seen imposed on a well-functioning economy. And I hate to say it, but I agree with her. I don't agree with her. I do agree with her. Because the reality is, if you look at the other days we were talking about, right, we compared this Liberation Day dump as one of the worst dumps the market has seen. You're comparing to COVID, right? A pandemic which was out of control. You're compared to a Great Depression. You're compared to the financial crisis. None of these were self-inflicted where a president comes in on inauguration and just says, I'm going to prove a point here, and dump the economy into what was very close, if Trump didn't U-turn yesterday, to a depression, driving a healthy economy into a depression. I mean, this is kamikaze, guys. And I'm not someone that's pro, Trump or Biden. I don't care. I'm neutral, right? I'm not American. Doesn't matter to me. All I'm pointing out is the craziness of it, and it was absolutely crazy. And markets are suffering. Let's take a look at Bitcoin here. Back below 80,000. Need to build some support at 80K. 80K is a key psychological level for us. We need to bounce and start getting back higher. Otherwise, guys, the bottom of this W pattern, back down at 75, 74.8, starts to come into play. Right? We can even draw ourselves a nice little rectangle here to say this region could be coming back into play. okay, if we cannot maintain some support at 80k. Altcoins, just like they went up quickly yesterday, are just giving it all back up. Let me just drop you to the daily chart here on Ethereum, pretty much giving up all of its gains yesterday, bar about 3 or 4%, and most altcoins are following the same pattern. Sonic, kind of bucking the trend a little bit, did 24% yesterday, has given up 5%, so they're still doing okay, but many altcoins are falling. I mean, Pepe up 15%, down 5. XRP was up yesterday 14, down 5. So I guess it's not as dramatic as, let's say, the traditional markets. Traditional markets yesterday were up, what's the percentage there? 12% on the NASDAQ and gave up 5. So you still got a net of like 6-7%. Markets are still better off than they were before the U-turn, but we have to understand there are still jitters, right? And this is on a day where CPI came out good. I hate to say it, if CPI came out bad or even just worse than it was, we could have had a really bad day today. We could have given up much more of yesterday's gains and maybe dropped a lot more. And we could be at, on Bitcoin, we could have been closer to back down at these W levels now, right? We could be closer to 76.5 now, had it have not been for the CPI. So let's check in on the suits. Let's see what the good old suits are saying.
But there are all these.
I wasn't not saying it.
No, you weren't not saying it. That's right. There are a lot of, this may be the start of this, and this could be, yes, there could. And also, everything could work out perfectly fine. And I don't sell any newspapers or get any clicks saying.
No, if you're right about that, then people should be buying. So 480 on a 30-year, you're saying is a gift.
Well, hold on. We're a hedge fund. I'm not out here telling people.
But I'm just saying, if these moves don't make sense and the dust is going to settle and cooler heads are going to prevail, then that should be a buying.
Well, first of all, I don't want to say the moves don't make sense or not, because I believe in the market wisdom and the, so to speak, the wisdom of crowds, also the madness of crowds, but whatever. But so I don't want to say what makes sense or not. What I am saying is, in the absence of positive news, other than the suspension yesterday, which obviously generated a tremendous rally, people are assuming the worst. They're assuming a global trade war. They're assuming that the 125, 145% tariffs on China stick forever, et cetera, et cetera. And all I'm saying is, everyone just take a step back here. The market, as we all know, to quote, I forget whether it's Kindleberger or whoever it was, has predicted 8 of the last 5 recessions. There's a volatility inherent in the equity market. I was talking to somebody before we came on air. Have you ever seen anything like this before? Yes. When the China devalued in 2015. Yes. When the debt was downgraded in 2011. All of us have lived through these moments of insanity, and not that this one doesn't have its unique characteristics. What I am saying is, if you start to get some headlines that we've cut some deals with Thailand, with Israel, with Europe perhaps, and then eventually Mexico and Canada, some of those worst.
I mean, look, I kind of don't agree with this guy here. So what this guy is making the argument, he's saying, look, everyone's pricing in the worst. I don't think that's the case. I think before yesterday's reversal, they were pricing in like this is going to get really bad, a deep recession and a global trade war. I think they're now just recalibrating, and that recalibration will have some ups and have some downs as they just try to figure out what's going on. The facts are quite clear. We are worse off than we were going into this Liberation Day, right? Because we now have tariffs. Before Liberation Day, the effective tariff rate was about 3%. Now it's 10% across all countries and 145% now on China. So if you calculate a blended, I think CNBC did this earlier on our live stream this morning, it's effective at like 23% everywhere, is the rough US kind of tariffs. You've gone from 3% to 23% tariffs, some of the world's highest tariff levels. So it's not like just because you reversed yesterday that we're now out of the woods. No, we've avoided the horror story. Okay, granted, we've avoided that horror story narrowly, but it doesn't mean we're out of the woods. And I think that's where the market is trying to say, okay, let's find that level. And ultimately, the problem is quite clear. We have uncertainty, right? And if you look at what the Treasury Secretary Scott Bessent says, he said the following. He says that as tariff negotiations develop, we will end up in a place of great certainty over the next 90 days. Bessent also touts today's better than expected inflation reading as well as a successful bond market. So I don't see anything unusual today, he says. So what he's almost trying to say is, look, we're going to get some certainty in 90 days. And the reason he's saying that, he's very astute in what he's saying. He knows investors want certainty. Investors don't mind if you tell them what the situation is. They can adjust for it. They can adjust their portfolios. They can go defensive. They can go offensive. They just don't like it when they don't know what's going on. And that's exactly the market we're in right now. We don't know this time next week what's going on with US-China. We don't know what the retaliatory situation is. We don't know how much it escalates. We don't know what the situation is between US and Europe. We don't know what their negotiations are. Where do they get to, right? And that's the point. Over the next 90 days, they have to make progress. They need to get this out to the market and say, we've done the deals, we've done it quickly, we've done it expeditiously, such that you have some direction, you can have some certainty. Go ahead and price that in. If that means you want to dump a bit, that's fine. Let's dump, get to the level we want to get to, and then we can build from there. Because if we have this lingering over our heads, we could get more positive data like the CPI inflation we got, but the markets won't be able to rally on it because we're in a position of doubt. Okay, so it's really important that these guys quickly do a job. Don't even use the full 90 days. In the first 30 days of this 90 days, negotiate with all the big boys, get some clarity, put it out to the market if you want this market to recover. Okay, now, of course, they're putting pressure now on Jerome Powell to cut interest rates, right? You're already seeing tweets come out. You've seen Trump tweet that, oh, look, the inflation rate has dropped. You know, he wants them to cut rates. I saw someone else tweet earlier today, it's time for a rate cut. You know, David Sachs and these guys in the Trump team, they want Jerome Powell to do the work and increase liquidity. Okay. Mad Samand in the chat, brother, Bitcoin just hit the fair value gap yesterday. Yes, yes, yes. I mean, look, again, we can look at all these levels. We can look at TA. It's nice, gives us some direction. We just need certainty. At the moment, we're getting rejected from our EMA ribbon. We don't have the market sentiment to reclaim this level, unfortunately, just yet, okay? And that's going to create volatility. Even with the trades I'm taking currently, it creates volatility. Let's say I find the perfect trade with a perfect TA setup. I love the technicals of it. I love the fundamentals of it. And then there's a tweet from Trump and the market's dumping like this 4%. It's hard. It's hard market. Traders, investors do not like this type of uncertainty. It causes problems, okay?
Stress points insofar as that dealers, so Treasury dealers, were as long Treasuries as they've ever been as of last week. Now we get more of that data. We get a new read on that data as today at 4 o'clock, and so because they're so full, I think they went into this sell-off without having the capacity to buy more. So that's one reason why doing something like exempting Treasuries from the supplementary leverage ratio.
Just want to come in and play you guys this from Trump.
President, if you aren't able to reach the deals that you want to see at the end of the 90 days, will you put those higher tariffs in place, or will you extend
Well, that's what would happen. I mean, if we can't make the deal that we want to make, or we have to make, or that's, you know, good for both parties, it's got to be good for both parties. And then we'd go back to where we were.
Go back to the numbers that you announced last week.
I think so.
You wouldn't extend the pause?
Yeah. We'll have to see.
This kind of rhetoric is not helping, right? It's not helping the dump we're getting, because he's almost saying, look, I think we'll go back to those numbers. And this is where Trump is struggling, because
what happens at that time?
Ultimately, let me pause this again, sorry. Because ultimately, he's trying to play two things at the same time, right? He's scared that the market is dumping. He doesn't want the market to dump. It's a side product. But he needs to act strong, and he needs to act like he's got leverage in front of China, in front of these guys, right? Such that he can get the deals done. Because until the deals are signed, he needs to pretend like, you know, his threat is real. It's like when you're kind of disciplining a kid or something, you know what I mean? But if he now shows that he's capitulating to the market, which, let's face it, he did yesterday, then China, Japan, EU will go, hang on, he's not got much strength there. A couple of days in, the market tanked. He's not got the backing for this, right? So you end up in a bit of a tricky situation. So Trump's got to come out with this stance, even if he doesn't believe it. Even if he would never go back to that 46%, the made up numbers on the tariffs, the high tariffs, he's got to act like he would, right?
You said yesterday you were considering some exceptions for companies. Can you talk about what you're considering? And then also on the reciprocal tariffs, you said they'd be substantially lower. Same math formula going to be used, or is that tossed out?
I'm not considering now for any country or company, but it's possible that I would. But I'm not. We don't have that situation right now. People understand where we are, what we're going to do. But it could happen. You know, it's called flexibility. You have to have certain flexibility.
President, what are you planning on using the money that you're gaining from revenue through the tariffs on?
Paying down national debt, reducing taxes, creating good budgets, helping Christie with the border and all of the other things. I built hundreds of miles of wall, as people now understand, 571 miles of border wall in the first administration. But we're going to beef it up, and we're going to add more. And, you know, the numbers are incredible, really. The numbers are what's taken place. We had great numbers, but these numbers are topping my last administration. And Christie and Tom Homan have done an amazing job, but you know, it's an expensive process. This weekend, where they used to have hundreds of thousands of people standing there pouring through the border in Tijuana, Mexico, this weekend they had nobody. You had a man sweeping this massive...
Okay, I don't care about this stuff. The main thing he said there was that he's willing to go back to those crazy rates again. But also, he's mentioned that he would like to be able to work a deal with China. Of course he would. Of course he wants to come to an end. And both countries will want to come to a deal at some point. The problem is when you start brinksmanship, when you start testing, you know, a person or a country in this case, like there are consequences, right? There's the alpha role, and there's people going to feel disrespected. Like, it's not going to be easy for him to just sit down and do a deal. So the question now, which investors are trying to figure out, is how much of this pain in this game do we have to go through? How many retaliatory measures are there going to be? And, you know, it won't even necessarily just be that the tariff keeps going up. There'll be other types of retaliatory things that they could do, which could affect the markets, right? So it's something we'll have to keep an eye on.
To get out of that trade. So that's where I question whether or not it's the basis trade is driving this volatility.
It's what I wanted to ask you yesterday, and I couldn't get to you, and now I got to you today, so I'm so glad we could. Ira, thank you. Really appreciate it. Bloomberg Intelligence Chief U.S. Interest Rate Strategist, Ira Jersey.
Hey, keeping an eye on markets is Charlie Pell. Let's get to him for an update on the markets and, of course, a business flash. Hey there, Charlie Pell.
Well, hello there, Tim. We are lower, off-session lows. Do want to begin, though, with a couple of developing stories, headlines right now on the Bloomberg Professional Service. The U.S. wants to install federal oversight of Colombia. The Trump administration wants Colombia to enter into a consent decree, that according to the Wall Street Journal. Also getting...
Just on this, yeah, look at Ethereum, right? Ethereum can't catch a break, because if you look at the Ethereum chart here, Ethereum went up yesterday for 13.5%, and then it's just given up 9% of that, right? And when we were looking at the others, like Bitcoin went up 8% yesterday and has given up 3.5%, so less than half. Right, Ethereum has given up 3/4 of its gain. Right, we looked at Sonic as an example, went up 23%, only gave up 4%. So by doing this, you can see the alpha of which coin is default bullish. So if you're looking at projects to kind of add to your portfolio, those with momentum, this is a nice way of doing it. Like, maybe we just calculate it. Like, take out what they went up yesterday, look at how much they gave up today, and the difference in percentage, in this case, you know, 20%. Is still up, right? So it's ready to run, in other words. I'll give you another example. Let's look at Griffin, right? AI play. Ran 22% yesterday, gave up 8%, right? So the difference, 14%. It's still up. Pretty decent, right? XRP, okay ratio. You can just look at the two candles and you can see which coins are primed and ready to move. I mean, Toncoin here is not ready to move, right? Yesterday went up 6% on the positive news, but gave up more than that, 7% here on the negative news, right? Pepe is looking decently correlated to market, up 15%, down 4%, so still up 10%. Let's take a look at Solana about 50-50, right? It went up 13% yesterday, gave up close to 7% today. Cardano up 13%, gave up 5% of that today. Seems okay. Polygon seems okay looking at the percentages. Chainlink looks strong, up 15.7% and only gave up 5%, so still up 10-11% on yesterday. So you can start seeing, right? It's a nice quick way. DOT, you can see, is not really in interest right now. Went up 8% yesterday, but gave up 5.5% of that today. So it's only a couple of percent. So you can quickly see which coins are favorable. Avalanche looks favorable, guys. Up 14% yesterday and only giving up 1.5% today. You see, you can start getting clues of which of these coins are really ready to run by just looking at this percentage. So how much of it has it just given up with the rest of the market? Is it overreacting or is it underreacting with the market? And Ethereum is not a good one. Ethereum is not a good one at all. Just looking at a few others, see if any catch my eye. I mean, look at that. Hyperliquid, great example. It was green today, right? One of the few that are actually green today. Grass is a bad example, right? Even on yesterday's news, it couldn't hold it green. So not in favor at the moment. Ondo looks strongly in favor. 20% yesterday, only gave away 3-4% of that today. Can you see what I'm doing here? Can you see how I'm trying to calculate these percentages? Let's take a look at Bitcoin dominance. If there's anything you guys want to look at, feel free to jump into the chat, yeah? That's the whole point. And make sure you're following as well. Let's get to 20 followers on Kick, which we've just started. So guys, do support. follow. If you're watching on YouTube later on, then drop a comment and also go to Kick. The link will be in the description and follow me there so you get notified when I'm live. So you're not watching the replay, you get it live. US 10-year is up. The yield is still up 1.6%. Again, you wanted to see this down, right? Trump would have expected this to start coming down. Remember, yields going down means the price of the bonds are going up. More people are buying the bonds. That's not currently happening right now. If this causes liquidity problems amongst banks, and then again, maybe the Fed will have to step in with some liquidity measures, right? And again, that would be positive for crypto because you're increasing liquidity in the market. Okay, so that's something that we could see play out as a potential scenario.
Minimum 6 months in a lot of cases. They've actually brought in a year's worth of inventory, hopefully ahead of the tariffs that are applicable. You know, but again, the unpredictability is a problem. You know, when the EU was going to institute a 50% tariff on American whiskey, our country responded by threatening a 200% tariff on imported alcoholic products from the EU. Now, we have a value for the money wine, Santa Rita, that we import from Italy. We import a lot of it. A 1.5 liter Pinot Grigio bottle with a 200% tariff would have gone from $12 a bottle to $27 a bottle.
Wow. So in other words, by trying to hurt the champagne or the European wine industry, it would have swept you into that because you import wine.
Yeah, totally. And a lot of the companies in our industry don't just do spirits; they also do wines too. But you know, if we so what we did was we literally paused, and they're still paused, imports of this wine because you know if you bring in
sooner rather than later. I think I love your interview you did with Boaz Weinstein, who I thought, you know, was assessing the situation and saying the thing is here, we have a president who's in for just under 4 years here, and that he said the uncertainty genie is out of the bottle. So do we continue to, in your view...
This is an important point I wanted to share with you. Check this out. So stagflation or recession are still on the table despite Trump's tariff pause. Northwestern Mutual. Take a look at this paragraph. We didn't dramatically, because I agree with this bit here, look at this. We didn't dramatically alter the overall tariff rate with yesterday's news. We just changed the composition of who it's on, with China picking up more of the tab. Because remember, yesterday, if you look at the Trump tweet, even though it was met with excitement, it was good news and bad news. And he gave the bad news first and he gave the good news at the bottom of the tweet, right? He said, China is going to 125%. It's actually 145%. And then I'm giving 10% to everybody else. Okay, instead of what it was. So in other words, the composition is still the same. If you look at who his biggest trade partners are, the composition is still the same. It's just a different way of kind of concocting it. And that's what markets are starting to realize when they sober up. But overall, we are still near the same average rate we were coming into the day on, which is still higher than at any point since the early 1900s. Uncertainty is maybe a touch less for now, but still elevated and likely to remain so over the next 90 days. This, plus likely increased costs, is likely to weigh on consumers and CEOs, which risks pulling down growth. Whether it's stagflation or recession, economic and market risks remain elevated. Spot on. Couldn't agree with that more. I think that's a really accurate way of portraying it.
Certain financial goals that it's just not giving. Delta earlier this week. You mentioned a lot of uncertainty, and I know yesterday Goldman Sachs rescinded its call for a recession this year. Are you seeing signs of a recession?
So let me say this. So one of the things we want to talk about was the survey. First, I would say on the insurance survey.
It's a 14th annual global insurance survey, 405 companies representing over $14 trillion in balance sheets assets combined. That's a lot.
That's a lot. It's about half the global industry's asset base. I bring that up because one of the questions we said is, what are you concerned about? And that question they got absolutely right. They're concerned about it.
I just pulled this up for you guys so you can take a look at what I was saying earlier. So again, China's gone to the 145%, right? And the rest are going down to 10. But take a look at this. Mexico, Canada, and China, the three countries Trump has targeted for tariffs, are the top 3 trading partners. According to data from US Census, Mexico is the largest trading partner to the US, accounting for 16% as of September 2024. Canada and China also share double digits, 14% and 11% respectively, right? And those battles continue. He still has to negotiate Mexico. He's got to negotiate with Canada, and the China one we know has just got out of hand. So already the 11% of the trading partner is a problem. Together, these 3 countries account for 40%. In total, the top 15 nations the US trades with make up nearly 75% of the country's total trade. And that's the point. That's the point, right? He's put 10% on everybody, even the ones which are smaller, fine. But we don't know where Canada's going to land once they do negotiations. We don't know where Mexico's going to land once they've done negotiations. And China, we do know, is at 145% with potential more tit for tat going on. So that's why the market has to be sensible and go, hang on, we're not out of the woods here. It is a bit of a mess, right? They need to understand that, and you're seeing that come through in the price action. Now, again, like I share with you, it's really important that Bitcoin holds its EMA ribbon. I just want to get to Sunday above this EMA ribbon, right? If we can stay a little bit green like this, that's fine. If we can even get a bit higher, maybe 80K, 81, 82 is nice. So you have a bit of a green candle here, that's good. As long as we don't close below 76,000, where we wicked down to earlier this week, and I don't think we will, fingers touching wood or whatever you do, then we should be good, okay? So that's what I want to see here in the market. Now, of course, Bitcoin dominance has just been untouchable, right? Back up to 63%. These are levels we've not seen since going back to Feb 2021. Bitcoin always does well in periods of uncertainty. Just like, you'd expect the US dollar to do well, Bitcoin does really, really well in times of uncertainty. And now you're forming what is almost like a bit of an Adams and Eve pattern, right? Where you work your way down. You have this pattern, and then you have this curling pattern. And can it start trying to get towards 70% will be the next attempt for Bitcoin dominance. So, again, this is why I always say to people, why do you neglect Bitcoin? Why do you not have enough Bitcoin in your portfolio? Why do you not have enough, of the veg? I mean, in this case, Ethereum is letting us down in this market, but why do you not have some of the bigger boys that, when altcoins are painful, they're holding your portfolio up? It's important.
But we have to see how things unfold. And if we end up in a deeper recession or a deeper recession, that's going to weaken the underlying asset values. Now, the thing you said about the denominator effect is the ability to put new capital to work. And there's two components to that. One is I already have a private equity portfolio. I was hoping to get realizations, give me fresh cash to put back to work. And if the public markets are closed, particularly the IPO market, you're not going to see as many of those realizations. So I'm going to be keeping more of my capital tied up in those assets. And then the second point you're making, which is more applicable, quite frankly, to pension plans and sovereign wealth funds, is as the public assets, particularly the equity assets, decline in value, all of a sudden my exposure on an asset allocation basis to the private assets has increased. Again, reduces my willingness to invest more. So there's
this was supposed to be the year, right? That all of a sudden we could tap the public markets, sell some assets, IPO, whatever, right? Or M&A, and it
this was supposed to be the year. It is only April.
Okay.
What I want to know is whether or not you're seeing anything in the market on the retail consumer discretionary spending side of things that would indicate that this is either a bottom or if the worst is yet to come.
Yeah. Hey, Dom. One name that I'm seeing that's sticking out is how about one of the biggest travel hotel stocks out there, Booking.com. Now, consumer discretionary is massive. There's different areas that are doing well and others that are not. But, with all the volatility driving crude oil below 60, we're there now. You got to think summer driving season's here. I think, with a little confidence that the tariffs aren't going to continue to send things into chaos, I think people hit the road. Booking is great, showing a lot of relative strength. It's only about 15-16% from the highs. They're buying stock back. They're beating margin expectations. They're growing 17-18% EPS. I would say take a look at Booking. I hold a good percent of it in the growth portfolio. I'm looking to add, again, with a little stability in this market.
Okay, let's come away from that. He's talking more about his stock portfolio. I was just having a look at this meme while we were listening to that. I did that, but then the reality is the next day, it was that. Never a dull day in the markets. But look, you got to zoom out, right? Ultimately, when you're an investor, you can't get stressed by this kind of stuff. You can see, you just got to have thick skin. Do you see me bothered? Do you see me suddenly panicking to sell all my crypto and my stock holdings? And no, we've seen these moments time and time again, right? We can't panic sell. I mean, the markets go up, markets go down. I shared this with you yesterday before we had the reversal from Trump. Like, we've navigated COVID, we navigated depressions, we navigated financial crisis. I was very young, just started my work as an investment banker in London when we were in the midst of the financial crisis, right? I was very impressionable. I remember it very clearly. I remember, my boss's boss kind of taking his, brown box, putting all his belongings in there and being fired, leaving the building, right? Not knowing what happens next. Like, I was there, I saw it. But markets recover. Markets, time and time again recover. Now, the only difference here is this is a self-inflicted wound, which is even worse, right? You're sitting there going, there was nothing wrong with the market. There was no pandemic. There was no credit crunch and financial mortgage crisis. There was no Great Depression. Why did you have to do this? There's no World War III. Why are you doing this, right? That's the frustrating bit. But as investors, who cares why? It's happened. We got an opportunity. You get cheaper prices. Either you make the most of it, right, because you're buying the dip, or at least don't just panic sell. At least be patient. When you look at this on Bitcoin, we're in an uptrend, right? If you look long enough and you kind of draw this line here and you go, hang on, look at that. We're doing all right. What are we stressed about? This is an asset class that has always proven people wrong, and it's up time and time again. And if you zoom out long enough and even maybe just change the line to a line like this, it would just calm your nerves. Just turn off the EMA ribbon and just go, hang on. That's what I want to invest in. That's a nice chart, right? And if you smooth it out over long enough, it just calms your nerves, just lets you relax and go, hang on, it's not that bad out there, is it? It's not that bad. We're just kind of getting swung around in the volatility and I'm getting freaked out. No need to. Stay the course, work for it. At the end of the day, what I remind myself of whenever things get a bit techie in the markets is, look, why do I hold Bitcoin and crypto, right? Because fiat currency is garbage. So whenever I zoom out and things get crazy, I'm like, I don't want to be in the dollar anyway. Why would I want to be in a dollar that is eroded since the beginning of time? Let's see if I can pull up a chart of how this, dollar erosion over time. Like, this is a deflationary asset. Why would I want to be in this thing? You guys have seen this chart before. Let's open it up for you guys. Why would I want to be in this asset class here? This is not the chart I want to go, right? Like I just showed you, this is the chart I want. This is Bitcoin. This is your dollar. Let's do that again. This is Bitcoin. This is your dollar. Am I going to sell this and panic into this? Am I going to sell this and panic in? You get the point. Yeah, I'm not. Because fundamentally, I don't want to be in that asset class. I don't want to be in fiat currency that is getting deflated out, that inflation's going up year over year over year, and $100,000 in my bank account next year will have the purchasing power of 90,000, and the year after have the purchasing power of 81,000, and eventually I'm just sitting there, not even able to buy a piece of bread one day with my $100,000, right? Like, that's what it's going to come to, because that's all they do. They keep printing to minimize their debt, to make sure they can manage their interest payments, because they're fundamentally insolvent. They're trading as an insolvent country. Trump doesn't rule out extended. This is good news 30 minutes ago. Trump doesn't rule out extending the 90-day tariff pause. Trump is declining to rule out the possibility. Trump tells a reporter in cabinet meeting that if he can't reach deals he wants with US trading partners, then tariffs will revert to their higher rates. That's what would happen, he says. It's just got to be good for both parties. But when asked if it means would he extend the pause, Trump says we'll have to see what happens. I mean, hopefully we don't. Like I said, hopefully he doesn't even use the 90 days. Make good progress. Use 30 days. And again, like I said, just use the 30 days to focus on the big boys. Do something with the EU. Try to figure out what's going on with China, Canada, Mexico. Try to solve the majority of your biggest trade partners, and the market will calm down. We don't need you to focus on Vanuatu and some of the other smaller single-digit trading partners. Get on these double-digit ones, right? These top 3 account for 40%. The top 15 account for 75%. So take these top 3, take the next 7, so you got the top 10, and you've probably got 60% of your trade partners there. Get it done. Get markets back on site, right? Quick and easy. If you're about business, that's what you're doing fundamentally, and we're back on here for the markets. In terms of the Fed, good inflation numbers, right? Covered that off earlier. Make sure you go watch that stream from earlier today for the CPI data. it's good news. Markets can't take it as good news right now given what's going on, but it is good news, right? It means we got some breathing room, that if inflation's to notch up on the next reading because of some of these tariff implications, it's okay. We've got a bit of breathing room, and we'll know that underlying inflation, right, the battle that we were fighting, did come down to 2.4. So if it goes to 2.8 next month, we know that 0.4 is tariff related, and we can kind of quantify that in our minds and not be too stressed about it going into it.
Being a stabilizing influence on the markets.
You can talk to people in any walk of life in the private sector, in any industry. They will tell you there's trillions, $4-5 trillion of money sitting on the sideline, not being invested in America now until they see what the tax code looks like. Everybody's talking about tariffs right now. Most businesses are waiting to see what the tax code will look like before they make major investments.
A lot of the details are going to come together over the next month. And one thing to really keep an eye on here, you saw a lot of concerns the last week from fiscal hawks who were saying, hey, we need to make sure that we're seeing significant spending cuts. But you also saw Speaker Mike Johnson huddle today with a number of more moderate Republicans who say if the cuts are too big, if things like Medicaid really get hit, that's going to harm a lot of Americans, and it could make it that much more difficult for Republicans to hold the House next year. Kelly?
Emily, thanks very much. Emily Wilkins, we appreciate.
All right, guys, let's leave it there. Looks like we're going into a red close here on the markets. Let's see where we're finishing out. I mean, of course, Bitcoin's going to continue trading through the night, through to the Asian periods, but down 3.6% after a nice strong day. I mean, we're still better off. No reason for major concerns. But at the same time, I think the best way to characterize this is we are by no means clear of the woods. We still are in a downtrend. We still getting rejected by the EMA ribbon. We still have worries around the tariffs. So stay cautious. Don't go with crazy leverage longs right now. Be tentative, be a little bit nervous, be conscious, still be in dip buying mode. Don't be in overzealous long mode right now, because you're just going to get yourself caught by these liquidation wicks, which is no bueno for you or your cash position. Hopefully you enjoyed these updates. If you like these live streams, then engage in the comments. Let me know the format. Let me know what you want to see more of or less of, and I'll try to tailor it for you. Thanks for joining me, and I'll see you in the next one.